These are the 7 reasons why lenders love a 720 credit score. 1. Less risk. Credit scores have different levels. You have bad credit, you have fair credit, you have good credit. And then you have the level where lenders start looking at you very differently. That level is around 720. The difference is, with a low score, lenders see risk. With a 720 score, lenders see someone who is more likely to pay on time. And for lenders, what having a 720 credit score means is that you are easier to approve. Let's say you wanted to get a car loan. You found the car, you have the income, you have the down payment, but your credit score is sitting at 560. Well, if I'm being realistic, most lenders are going to look at that and either deny you or give you a very high interest rate. But with a 720 credit score, that same lender may look at the same application and say, okay, this person looks safer. Now, I can't say from experience that every 720 score gets approved for everything, because income, debt, and credit history still matter. However, a couple years ago, I saw this happen with a client who had decent income but a messy credit report. He had collections, he had late payments, he had high balances, and he kept getting bad offers. But once those inaccurate negative items were reviewed, disputed, and his utilization came down, his score moved closer to the 700s. And suddenly, the offers looked completely different. That's just an example where having a stronger credit score is so much more helpful than walking into every application looking risky. Because credit repair is not just about a number, it is about changing how lenders see you. Number 2, better approvals. If there is something people with strong credit love, it is options. And a 720 credit score can give you a lot more options. Credit cards, car loans, apartments, personal loans, business credit, even mortgage approvals. The problem, though, is most people do not understand why they keep getting denied. They think the lender just does not like them. They think the bank is being unfair. They think their income should be enough. But credit is a major part of the decision. If your report has collections, charge-offs, late payments, and too many inquiries, that lender may not care how badly you want the approval. They are looking at risk. And when your credit report looks risky, they protect themselves. That means denial. Or worse terms. Or a higher deposit. Or a smaller credit limit. But when your score is around 720, you are not walking in begging for approval. You are walking in with a stronger profile. Now, since you are here for credit repair tips, this is why I always say pull your full 3-bureau credit report first. Do not just look at one score app. Look at Experian. Look at TransUnion. Look at Equifax. Because one bureau may show collections, another bureau may show inquiries, another bureau may show wrong personal information. And if you do not see the full report, you cannot build the right plan. 3. Lower interest rates. People love a 720 credit score because of lower interest rates. Now, as somebody who has spent a lot of time looking at credit reports, I can tell you this. Bad credit is expensive. Very expensive. A low credit score does not just hurt your feelings, it costs you real money. A car loan with bad credit can have a much higher payment. A credit card with bad credit can come with a higher interest rate. A personal loan with bad credit can cost way more over time. And sometimes, the person with bad credit is buying the exact same thing as the person with good credit. Same car, same loan amount, same income. But one person pays more because their credit score is lower. That is not a small thing. That can be thousands of dollars over time. And this is where people start to understand why credit repair matters. Because if inaccurate negative items are sitting on your report, they may be costing you money every month. A collection is not just a collection. A charge-off is not just a charge-off. A late payment is not just a late payment. These things can affect the rate you are offered, and the rate you are offered can affect your whole budget. This is why the goal is not just to get approved. The goal is to get approved with better terms. Because there is a big difference between getting a loan and getting a loan that does not destroy your monthly payment. 4. Higher credit limits. A 720 credit score can also help you get higher credit limits. This matters more than most people think, because your credit limit affects your credit utilization. And credit utilization is how much of your available credit you are using. Let's say you have a credit card with a $1,000 limit, and you spend $800. That means you are using 80% of your credit. That looks risky. But let's say you have a $10,000 limit, and you spend the same $800. Now you are only using 8%. Same spending, different credit limit, different impact. And this is why higher limits can help your credit profile look stronger, not because you should spend more, but because you have more available credit. The mistake people make is they get approved for a higher limit and then they max it out. Do not do that. A higher credit limit is not free money. It is a tool, and if you use it correctly, it can help keep your utilization low. But if you use it badly, it can pull your score right back down. This is why credit repair and credit education need to go together, because removing negative items is only one part. You also need to know how to keep the score strong after it improves. Reason number 5 why lenders love a 720 credit score: cleaner credit behavior. Earlier we talked about risk, and this is the main point. A 720 credit score usually tells lenders that you have better credit habits. You pay on time. You do not max out every card. You do not apply for new credit every week. You manage your accounts better. And even if your report is not perfect, it looks more stable. Now, that does not mean every person with a 720 score is rich, and it does not mean every person with a low score is irresponsible. Sometimes people go through real situations: job loss, medical bills, divorce, family problems, business problems. One hard season can damage a report for years. But lenders are not reading your full life story. They are reading your credit report. And that is why the report matters so much. If the report says you are risky, they treat you like risk. If the report says you are stable, they treat you with more trust. That is why credit repair is so important. Because sometimes the report is not telling the full truth. Sometimes the balance is wrong. Sometimes the date is wrong. Sometimes the account is reporting twice. Sometimes the collection company cannot verify the account. Sometimes the late payment is not accurate. And if the report is wrong, you have the right to challenge it. That is not cheating. That is using your rights. Number 6, more negotiating power. This one is a little bit underrated. But having better credit gives you more power. When your credit is bad, you usually take whatever offer they give you. If the car dealer says this is the rate, you accept it. If the apartment asks for a bigger deposit, you accept it. If the credit card gives you a low limit, you accept it, because you feel like you have no choice. But when your score is around 720, the whole conversation changes. Now you can compare offers. Now you can ask for better terms. Now you can walk away from a bad deal. And that is powerful, because the person who can walk away usually has more control. This is what a lot of people miss about credit. Good credit is not just about borrowing money. It is about having choices. You do not have to accept the first offer. You do not have to say yes to a high rate. You do not have to act desperate, and sometimes just knowing you have options changes how you move. You become more confident. You ask better questions. You make better decisions. And that is exactly why lenders prefer people with stronger credit. They know other lenders probably want them too. Reason number 7 why lenders love a 720 credit score: long-term customer value. Having a strong credit score can make you valuable to banks, lenders, and credit card companies because they are not just thinking about one loan. They are thinking about the long-term relationship. If you manage credit well, they may offer you more products, better credit cards, higher limits, personal loans, auto loans, business credit, mortgage options, balance transfer offers. All because your profile shows that you are more likely to pay them back. It is the classic thing, right? When you do not need credit, everybody wants to offer it to you. But when you desperately need it, nobody wants to give it to you. That is why building credit before you need it matters. Do not wait until you need a car. Do not wait until you need an apartment. Do not wait until you are ready for a mortgage. Start cleaning your credit report before the emergency. Because credit repair takes time. Disputes take time. Updates take time. Building positive history takes time. And if you wait until the last minute, you may not have enough time to fix what is hurting you. So cool, folks. That is the video. These are the 7 reasons why I believe lenders love a 720 credit score. Let me know in the comments section down below. Do you agree? Disagree? What do you think I missed? And what do you think about the credit repair point? Because for me, that was always one where I was like, people are focusing too much on just getting things deleted. But when I started looking deeper, I realized credit repair is really about building a profile that lenders can trust. It is not just about removing collections. It is not just about disputing inquiries. It is not just about raising the score. It is about creating a cleaner, stronger credit profile. Because once lenders see you as less risky, everything starts to change. All right, anyway, I'll catch you on the next one.